Good morning, everyone, and welcome back to the channel. Today's analysis is about a company uh, which has been in the limelight for all the right reasons and the wrong reasons. And this company, I would like to serve as a case study for why just running screens and just looking at quantitative numbers may not yield the right results. So the company has a lot going for it. The company has been in the limelight for many events. Its performance financially has been very good. The numbers, the valuations look very attractive. But personally, the promoter has been facing a lot of flack for personal problems within the family, and a lot of things which are not written within the earning call transcript and really needs to be looked at by um, open source information and what has been published by newspapers and those kind of things. Um, so that becomes really important because you're not only investing in a business, but you're also investing in a person, and the business is as good as the businessman, right? So if the car is being driven and the driver is not good, it is a sure shot recipe for a disaster, a recipe for an accident. So I'll break this analysis into two parts. In the first part, I will objectively really see what the investor presentation of Raymond has to say in terms of what the business has done, how the business looks, and what are some of the nitty-gritties of the business, some of the stake sale that has happened within the business, and demerger proposals that are floating around. So those kind of things. And then in the second part, we'll look at what some of the key overhanging risk is and how this family feud could pose a huge risk to the stock. So let's dive right in. So within the first part, we'll just quickly have an overview of how Raymond's performance has been. So this investor presentation is at 2024 Q4, and these numbers which you see here is Q4 numbers. So you see that there's been a huge jump in revenue and EBIT and PAT and everything. And even when you look at the financial numbers, you will see that if you look at the consolidated figures, you will see that it has had a historically outstanding result. So from the profits have jumped from 737 to 1866. But if you really dive deep into it, you'll understand that there has been a sale of the lifestyle business within Raymond, and that cash has been utilized to not only pay its debt but also buy many precision which is involved in engineering. So Gautam Singhania really is trying to turn the business around by demerging the lifestyle business and also getting into the sector of engineering. So getting into OEM space and defense space as well, and also real estate. The land bank that Raymond has, so it has 100 acre of land bank within Thane, and the revenue potential out of it is close to 30,000 crore. So if we see the market capitalization of the company is sitting at around 20,000 crore, but the real estate business in itself has the option has the capability of generating close to 30,000 crore. That looks very good on paper. And we'll just quickly slowly unravel what the stock uh, has in terms of why the stock price is rising so much, why so much of investor attention is on this stock, and why, in my personal opinion, there is no smoke without fire, and it's better to be really skeptical of these situations because no matter how good the business, anything in terms of litigation happening on the personal front can really wipe out a significant chunk of Gautam Singhania's wealth. So here we see that there's a Bandra project launched as well. So the real estate within the real estate sector, they have gone into joint development, and Bandra and Sion and those kind of areas, they've undertaken projects, but those are the low hanging fruits. Close to 2,000 crore worth of projects from Bandra and Sion, and we'll see more in detail when we get into the real estate segment. But the Thane is the big one. Thane is where it has close to 30,000 crore worth of revenue potential. Don't hold me onto that figure. I'll just give you the exact figure when we go down. But yeah, so that is one thing that is happening. Here also we see that the lifestyle business is set for demerger, and there's an NCLT hearing on the 9th of May 2024. So that should take out Color Plus and Parks and some of the different brands within the lifestyle segment, the shirting and the suits and made to tailored suits and those kind of businesses will be demerged. Within the real estate sector, we see 4.6 million square feet of real estate being developed. So if we take an average of um, 4.6 million square feet, and we do a 30,000 per square feet of an average, which is a very overview kind of figure, we reach a figure of 14,000 crore, and the market capitalization in itself is sitting at close to 20,000 crore. So yeah, we'll have a more detailed look on the real estate segment later on as we go into the analysis. And within the engineering sector, also we see that it has forayed into sunrise sectors of aerospace, defense, EV, and EV components business. Um, EV components business is a very interesting one because automobile components business is something which I don't like. There's another company listed in the stock market called Motherson Sumi, and the way it operates is like if BMW is making, for example, its rear view mirror, it has a huge advantage in driving out price reduction on those rear view mirrors because of the sheer volume of consumption that BMW has. And what really happens is um, because of this, the supplier goes out of business because of the thin margins that they are operating in, and BMW then has to produce the car, right? So it calls on Motherson Sumi. I'm just using BMW as an illustrative example, is as an example. And then BMW calls on Motherson Sumi and tells them that you should really buy this business, and with your ability to turn it around, you can turn it around and make it into a profitable segment within your business. So Motherson Sumi knows the situation. It knows that BMW needs to produce its car. And what it does is then it says that I will buy the business, but you will write the check. And that's what happens. So Motherson Sumi gets the call, even without writing the checks. It gets the business, and it makes few changes. So, for example, if it acquired something in Austria, it will fire the person who's at the top. It'll promote somebody young from within the ranks onto the top, and it'll make some administration changes within the business. And lo and behold, the business is up and running. So Motherson Sumi really has those chunks of businesses where it's got together these kind of things. It's operating in a very tough environment. It's a bad business with a great entrepreneur, and that's how Motherson Sumi is operating. But coming back to the topic in hand, really OEM is something that Raymond has gone in, and Raymond has really shifted from the focus of textile into real estate and engineering, and which is pretty understandable, right? Because they had a land back of 100 crore, and they had to do something about it. So they spun it into the balance sheet, and now they're spinning the major component of the business, lifestyle, into a separate entity. So yeah, really would be interesting to watch out as to how this company progresses. So here, when we see that there is an increased demand for luxury homes, and luxury homes is something that they are targeting, and hence the per square feet um, revenue that they generate from real estate would be higher, because they are not only targeting um, real estate, but they're targeting luxury real estate. So we'll quickly move on to the segment analysis. So here we see that how the company, through its sale of certain segments within its business and sale of land 350 crore and 2825 crore sale of FMCG business, which we saw here, right? So when we saw this number, which is the profit and loss number, where the revenue has jumped to 9020 crore and the profits have just jumped almost 3x to 1900 crore. This is the answer. The answer is they have sold FMCG business. They have used that 2,800 crore worth of proceeds to pay off the debt. They have used 682 crore to buy engineering precision company called MPPL. And that's how it is. So 2,200 crores the after tax realization, used to reduce debt and buy MPPL. So we'll have a look at the segmental analysis and how this 9286 figure is really divided. And this chunk, which is marked in this maroon, is the lifestyle business. So we really see that this 9286, majority of the business is obviously coming from the lifestyle business. So the branded textile being 3450 and crore out of the 9286. So if you really look at the segments, you will see that the real estate margin is the highest in terms of segmental margins. EBITDA margins are the highest, so it's sitting at 25.7, and the blended Raymond margins are sitting at 15.9%. So really, although the weighted average is being driven by this 20.9%, this being the highest at 3450 crore, but the real estate is also significantly slotted to grow, and this is going to be driven out as a separate company, and all the shareholders of Raymond Limited, so which is this total group, will get 4 shares of lifestyle business for every 1 shares held. So that is going to happen. So yeah, quite interesting. We'll see how this auction-driven market responds to a demerger like this. So here we see the different segments within the business. So lifestyle, real estate, and engineering, as we discussed earlier, and aerospace, defense, and it acquiring MPPL. And the real focus is really beginning to shape its real estate business, selling of its FMCG business, um, some of the FMCG business, and demerger of its lifestyle business. So these are some of the key things that have happened within Raymond at the non-personal level. So here we see that the FMCG business was sold. It was sold for 2,825 crore. The after-tax realization was 2,200 crore. Post the selling, and also what does this lifestyle FMCG business comprise of? FMCG business has a trademark of Park Avenue, KS and Kama Sutra, and this earlier the segment, the promoter had held 49%, but after the sales the promoter now holds 54.87%, whereas the public holds 45%. So this will give a good overview as to what we're talking about the demerger, and how the demerger will impact, and what are some of the brands within the demerger. So we see that within lifestyle we have Raymond, Parks. So these would be Raymond TaylorMade and Raymond Store and those kind of things. Color Plus, one of the significant brands that they have, Park Avenue and Ethnics, within the lifestyle brand, which is doing 7,000 crore plus worth of business as at FY24, out of the 9,020 crores. So this is what they're doing. Real estate right now is at 1,590 crore, and as a contributory to the overall 9,000 crore is low. But moving ahead, given its big plans to list it separately and with the high margins that is generating on the real estate, this stock will be now within the Raymond Limited brand, and RCCL will be the lifestyle brand with these brands within it. So we'll quickly look at some of the products that they have. Obviously, everyone knows about Raymond, and these are some of the suits and super luxury suits that they sell. Also, this Indo-Western Rigo Italia brand that they have, and they are really into apparels, Park Avenue and Color Plus and Parks, and really a sunset industry, according to me, these apparel brands. And I think that's why the transition into some of the more sunrise sectors. Also Ethnics. So Ethnics really drives up the revenue numbers once the wedding season hits, and any slowdown through the FY is really corrected during the wedding season. So yeah, so that's it from my end. Do let me know what you think of the analysis. Do hit and like and subscribe and share. And do let me know anything that you think about the analysis. Yeah, but before we just cut off, I think the second part that we were discussing was really about the concerns that have been raised on the divorce of Gautam Singhania, and it is the wife has really filed a complaint that she wants 75% of Gautam Singhania's wealth, which is said to be 1.4 billion in fortune. So this needs to be close-eyed and looked at very closely. And in my personal opinion, I would never get into a stock which has this bigger risk. This is obviously not a stock recommendation. I've just laid out the facts which are there in the public information. And it's totally up to you whether to buy the stock, sell the stock, trade with the stock, do whatever you want with the stock, but please do your own research. Nothing is indicative, and it's just purely for educational purpose and to bring out some of the elements to help you make your decision. But really, you should be doing your own research while doing the buy or sell decisions. Yeah, so that's it. I think now I will close off on this one. Hope you have a lovely day ahead. Goodbye.